Buy Now Pay Later, better known as BNPL, is a short-term financing option offered by companies like Affirm, Klarna, and Afterpay. The idea is simple. Instead of paying the full amount for something upfront, you just pay a portion and split the rest into interest-free payments. So for example, if you're buying a $300 suitcase, instead of paying the full amount upfront, Buy Now Pay Later lets you split it into 4 interest-free payments of $75. It sounds amazing on the surface, but believe me, it's much darker than we think. For starters, this concept isn't new at all. It's just layaway with better branding and some clever psychological tricks. Back in the day, layaway programs were run by major retailers like Kmart or Target. So if you needed to buy something that was out of your budget, you could make a small down payment to reserve it, and then after paying the full amount, you'd finally get to take it home. Then credit cards came along, and that changed everything. Now with just a quick swipe, you could walk out the door with your purchase and worry about the payments later. But as we know, credit cards come with high interest rates and debt traps of their own. So now you get Buy Now Pay Later, the cooler, smarter alternative which offers interest-free financing with no visible downsides. Except there are downsides, a lot of them. Buy Now Pay Later has exploded in popularity in just a few years. In 2019, Americans used it for about $2 billion in purchases. By 2021, that number had ballooned to $24.2 billion. And in 2025, it's projected to hit a staggering $122 billion. That's not just growth, it's a financial wildfire, and it's spreading for several reasons. First, there's economic pressure. With inflation squeezing budgets, more people are using Buy Now Pay Later for everyday essentials. What started as a way to buy TVs and furniture is now being used for groceries, clothing, and even takeouts. Social media plays a major role too. It constantly floods us with images of luxury lifestyle, products, and influencers we feel pressure to imitate. And Buy Now Pay Later is right there, making those impulses easier to act on and worry about the money later. Combine this with a generation that never really got taught how to manage money, and you've got the perfect storm. But why is it even a problem? If they're not charging interest, then how is it bad for a consumer? To answer that question, let's do a quick comparison between credit cards and Buy Now Pay Later. Credit cards require approval, hard inquiries, a decent credit score, they have crazy high interest rates and late fees. For Buy Now Pay Later, however, all you need is an account. No hard inquiries, no credit score, instant approval, and 0% interest. Now the bigger question is, how do these companies actually make money if they don't charge interest? Well, they make money in way more shady ways than you think. For starters, they charge higher transaction fees to merchants. Let's say you buy a $100 item. Now, if you pay with a credit card, the merchant pays about 2 to 3% in processing fees to the credit card company. But if you use a BNPL service, that fee can go up to 8%. And retailers pay such high processing fees because it's beneficial for them. Studies show that consumers spend 10 to 40% more when using Buy Now Pay Later. But it doesn't stop there. Buy Now Pay Later companies also profit heavily from late fees. If you miss a payment, you could end up paying 25% more than the original price. And according to data, about 1 in 3 users misses a payment at least once. And those late fees have become a major revenue source for companies like Klarna. Then there is your data. Every time you check out using Buy Now Pay Later, you reveal your shopping habits, preferences, and financial behavior. That data is incredibly valuable, and many Buy Now Pay Later companies are cashing in by selling it to brands and advertisers eager to target you more effectively. But perhaps the most dangerous thing about Buy Now Pay Later is how seamlessly it fits in your shopping experience and how it messes with your mind. Have you ever noticed how the Buy Now Pay Later option is often pre-selected or highlighted at the checkout? That's by design, subtly encouraging you to choose it. The payment is delayed, so you don't feel the sting of the purchase in the moment. And because the cost is split into smaller future amounts, it feels more manageable even when it's not. Even the branding of these services reinforces this illusion of responsibility. Interest-free and budget-friendly sound like smart choices, even though what's really happening is overspending and future debt. And while Buy Now Pay Later could be harmless if used with caution and financial literacy, that's a big if, because less than half of US adults are considered financially literate. And just recently, Klarna partnered with DoorDash. That means people can now use Buy Now Pay Later for burritos and pizza. Now you can literally cleverly split a $15 burrito into 4 payments of $3.75. Now, using buy now pay later for a small purchase isn't inherently bad. The real danger is using it constantly for everything without any plan to repay. In 2022, 63% of BNPL users had multiple loans open at the same time. A third had accounts with more than one BNPL company, and more than half had BNPL as the only option to get a loan. This isn't smart budgeting, it's financial roulette. So how can we save ourselves from falling into this trap? Well, it's a cliched solution and you may have heard it many times, but I'm still gonna say it. Before putting your money into anything, ask yourself, do I really need it? If the answer is yes, then go for it. Because many times people using buy now pay later are genuinely in financial constraint and need that support. But if you're buying something just because you want it, then you have to ask yourself, do I have the money in my bank account? If the answer is no, then don't buy it, no matter how tempting it is, because you are borrowing from your future self without knowing how it's gonna look like. Always remember that BNPL isn't harmless, it's just cleverly disguised, so don't fall for it.